We're back with you, and we're keeping a close eye on what's going on in your ag commodity markets. I'm Marlin Bohling with you, your tour guide to these ag commodities, and I'm joined by Chris Swift of Swift Trading Incorporated, and he is based in Nashville. He joins us right now. So, Chris, this corn market, I want to take a look at what the corn is doing right now, and our quotes are provided here by bar chart. Right now on the corn, they continue to climb as we go. May corn now at $5.45 per bushel would be 6 cents higher. But you have the new crop December contract a penny lower at 4.77 3/4. Now, even that is almost on the high of the day, but interesting. That's about a 7.5 cent swing now in that spread as it widens out between the May and the December. So I'm just curious, what is that telling you about the market makeup when you see a spread widen out like that? Bull spreading in this case.
Well, probably what we saw is the weather conditions over the weekend brought a little bit of needed moisture to some of the real dry areas there. And two, we're still in a very demand-driven market. We're sitting here trading an inverted market where May is a spot month, and it's the highest month out there. And the only reason it's the highest month out there is because the people need the corn today, not 3 weeks from now.
So does that lead you to believe that the basis is probably still pretty tight out there in the country, or pretty strong?
Oh, absolutely. I haven't seen much changes at all out there in that. People have started going to other alternative feed sources now. They're doing other things to combat this high feed cost for corn.
Let's look at soybeans, and right now on the soybean trade, you currently have the May contract 4 1/4 lower at 14.09 per bushel. You have July down 3 cents, and you have November new crop soybeans dropping 7 3/4 at 12.36 per bushel. Kind of the same thing as in corn here. Not maybe as extreme, but again, I guess, would you call this bull spreading here, even though everything is lower?
Well, and it still is. Right now we noticed that the bean oil was so strong last week, and it's a little bit lower this morning. So probably without the strength of the bean oil and not that much strength in the meal this morning, beans are just a little bit softer. I don't think it'll take them long to catch up, though.
So the oil down about 13 points on the nearby contract. Soybean meal, you have the May 30 cents higher at 4.01 even per ton, but July is, now down 20 cents. At $400.30 per ton there. Let's move on and check out our wheat trade this morning. And in Chicago, you have the May contract 5 1/4 cents higher at 6.43 3/4. Here again, you have the nearbys leading the charge. The deferreds are about 2 cents higher on the late summer and fall months. If you look at Kansas City wheat, you currently have the nearby May 3 higher at 6.06 1/2. July 2 1/4 higher. Far out deferreds about 1 to 2 higher way out there. In the spring wheat market in Minneapolis, we're 4 higher. In fact, the May is now 4.5 higher. We're at 6.38 1/4 per bushel. July up 4 3/4. And I do want to touch on this cotton market too while we're here. We have the May contract 125 points lower at 86.31, and you have December new crop 110 points lower at 83.10 cents per pound. On this wheat market here, are you surprised that we're seeing higher trade even though we're getting moisture in the plains?
It is kind of interesting, but the wheat market just really hasn't done hardly anything. It's drifted a little bit lower from 660 now down to 643, but it's taken it close to 5 days just to get there. Every day seems to be within the previous day's range. So I'm not real sure that moisture is going to do anything for it until we get closer into the warmer weather, and the warmer weather will help predict whether or not the moisture has been a benefit or not.
All right, we'll come back in a moment. We'll take a look at our livestock trade here on a Monday with help from Chris Swift. We'll be right back. Let's examine where we are trading right now in our cattle and hog market activity, and we'll start with our live cattle board and our quotes provided by bar chart. We have the April contract now 20 cents higher at 119.20 per hundredweight, and June is now up 60 at 121.02. That's about 20 cents off of our high of the day at this point. We're off of our earlier low by about 80 cents right now. On the feeder cattle trade, we have the April contract half a dollar higher at 143.72, but hold the phone. It had been as high as 144.60, so that means we're off of that by about 90 cents right now. The May contract up 85 cents at 149.22, but here again, it has come off of its earlier high by, in this case, almost $1.20. So really taking a lot of wind out of the sails of early bullishness here in the feeders. Lean hog trade, everything lower on the nearbys with April down $1.37. We're now at 90.02, and May $1.05 lower at 92.60 per hundredweight. The nearby contract showing the most weakness here in the case of the hogs. What do you see happening here in this cattle market today? The cash cattle market really hasn't done anything for almost 2 months now.
Yeah, it's been close to 6 weeks we've been trading 114, and I continue to see further divergence. I think the futures market is very optimistic of the pent-up consumer demand and the surge that they believe is coming versus the real world right now, that we've got ample plenty cattle at weights that are seemingly not as egregious as what some people think that they are, and so we're producing plenty of beef right now.
Over on the lean hogs, do you think that it's a case of them just taking a rest for a little while?
I think so. High prices tend to cure high prices, and we've seen high prices for hogs for over 3 months now. So I could see where the exports might start to falter just a little bit, or some of the pork production get caught up here over the last several weeks.
You know, last week, Chris, there was a lot of talk about the fact that the feeder cattle market had been supported by the approaching winter storm. But has that pretty well run its course now in support of this market, or do you think there would be another threat yet?
Well, I don't think there is. The storm that I saw over the weekend was very centralized. Yes, it did dump a lot of snow in some areas, but it was not very widespread as far as the snow goes. And everybody talks about mud coming up now for the springtime and that being able to not be as good a feeding time frame. But right now, I don't see anything that's hampering the weights too awful much. USDA has not dropped them as significantly as what some had anticipated the previous storm to, and we're already caught back up on our slaughter rates and actually killed a few less head last week.
Well, great information, Chris. Thank you for joining us, Chris Swift of Swift Trading Incorporated, based in Nashville. Janet, with that, I'll turn it back to you.